How's it going, everyone? This is Daniel. In this video, we are going to be talking about SoFi stock. So we're going to go over and look at some important news that came out for SoFi stock that is super bullish. We're also going to be hearing from top analysts stating that the bottom is already past us. We are now seeing a massive potential for SoFi and other fintech stocks. We're going to be hearing from this top analyst, and also we're going to talk about short-term price prediction for SoFi stock. So make sure you stay tuned. We're going to be talking about all this important information coming up. As you can see over here, we have SoFi that is sitting at $7.23. We're up 2.55% for the day. For the last 5 days, we're up 35.9%. So after the earnings announced, we have some phenomenal numbers that came out. SoFi beat the earnings, they increased their guidance. As you can see, we got a pretty decent price action to the upside, and we're doing relatively well in the short term. So we talked about on the previous video that we had some analysts that came out and they changed some of their price targets, but as you can see over here, that did not really affect that much the stock. We're doing relatively good. And when you compare SoFi stock, today we're sitting at up 2.55%. The overall market is just going down aggressively. We have Apple, Microsoft, Amazon, Tesla just completely getting destroyed today. We even have some companies like Target that announced their earnings this morning. They're down 25.39%, and the overall market is just looking very bearish in the current moment. But we have SoFi stock that is holding up very strong. So this is mainly, the overall stock market is mainly going red because the Fed Chair Jerome Powell stated yesterday that he is going to be willing to do whatever it takes and to increase rate hikes as high as possible to kill inflation in the short term. So that is going to be some of the news that's being digested, and we're seeing some aggressive sell-off happening across the board. So later on, we're going to be looking at, of course, in detail breakdown of the technical analysis and what to expect. But we have some important news that came out for SoFi stocks. As you can see over here, this information that I got from Reddit, SoFi stock, this is a Reddit group. So we had a fantastic news that came out from Asia. So we have SoFi Singapore granted financial services license required for offering investment products. So that is pretty bullish news. So that means SoFi is going global, we're expanding, we're going into Asia, and this is a fantastic news for anybody that is holding SoFi stock for the long term. Yes, of course, we might see some volatility happening here and there with the overall market going down. That can have some impact on SoFi stock if we get even a more aggressive rate hikes and etc. That can have an impact on the short term, especially for the next few months. But however, for somebody that's holding SoFi for the long term, this is fantastic news to hear. This is another important revenue stream that SoFi can add to his balance sheet, and that could potentially grow SoFi's revenue across the board. So this is a fantastic news for anybody that's invested in SoFi stock. So of course, we have some more important news that we're going to be talking about for SoFi. We have top analysts coming out stating that the bottom is set for the majority of the fintech stocks like Robinhood and SoFi, and they're talking about exactly, okay, now we could potentially see these fintech stocks outperforming the S&P 500 for the next 6 months, basically for the next half of the year. These stocks could potentially do very, very well. So half of the year is gone so far. As you can see, year to date, we're down 53%, but they're expecting a significant bounce on the next half of this year. So we're going to be hearing a detailed breakdown of the top analyst going over exactly why he believes that these fintech stocks that has been aggressively selling off to the downside could potentially have a phenomenal bounce and recovery. We're talking about recovery up to like 30 to 40%. So if even that happens, we might see SoFi stock above $10 by the end of the year. So let's check out the video, and then I'm going to come back and we're going to go over a look at exactly what to expect for SoFi stock and the overall stock market for this upcoming week. So make sure you stay tuned, but let's check out the video first.
Hey, look, we've done real work, rigorous work. We've actually analyzed almost 50 payment stocks and nearly 450 tech stocks. And what you're seeing is that they closely correlate, the stocks closely correlate with the growth. I mean, the 3-year stack, i.e. excluding COVID, it's almost like 100% correlation. What you're seeing now is that analyst expectations for the next 4 quarters are actually very modest. They're talking about a deceleration in growth. You would ask me, Dan, why do you think it's great? It's great because it can only go one way, which means it can only go up. So it prices in, the stocks are actually pricing in a pretty severe deceleration. And if things don't deteriorate dramatically, you should see those analyst expectations go up. And that would be a boon for a lot of these fintech stocks that we cover.
Dan, does it matter what the environment is in and whether or not these fintech stocks have ever operated in an environment like this in which interest rates are going higher, there are great inflationary pressures on the consumer, et cetera? Or does that not matter in your model?
Well, everything, the macro always matters. If you think about some of the more, newer names like SoFi, for example, or Affirm, there was a great deal of, controversy and fear heading to the quarter, following the Upstart earning, for example. And the most interesting surprise was that actually everything was fine, right? They were beating, they were raising, they were making money in the case of Affirm, which everybody thought, couldn't happen. The delinquencies are, not growing. The high quality borrowers are stabilizing. So I think that there's a lot of fear out there, but the reality is that these business models are more stable than a lot of people give them credit for.
Dan, it's Karen. Thanks for being on. Let me ask you about credit quality. So in your model, you must have some scenarios where credit quality gets worse. And so how much downside do you think, an Affirm or a SoFi might have in a worsening but not cataclysmic credit scenario?
So I think this is a great question, Karen. I mean, look, I think that it right now, given, we live this space, right? We talk to investors all day long, right? I'm sure the same people that we talk to. And I think right now, we're at that epicenter moment where it basically prices in, I wouldn't say a disaster, but something close to a disaster. So I think the downside, kind of in our bull bear scenario, we're kind of very close to that bear moment, which means that there's more upside than downside. So the downside, it doesn't get much worse from a sentiment perspective. I mean, this is from our broad conversations. Again, I'm looking at sentiment versus reality. Of course, things could deteriorate down the road. I can't predict the macro. I checked my crystal ball today, and the battery ran out, so I have no idea, what actually is going to happen. But so far, the evidence shows that things are pretty stable, despite the fear.
You should try plugging it in, Dan. In terms, when you say, that there's a lot more downside, I'm just trying to figure out, at what point do you get concerned about credit quality? Because we've been operating in an environment where consumers have no excuse to have bad credit. They've been getting free money from the government. They've been getting free money in the form of interest rates. They have no excuse to have bad credit. And so I would imagine that there's sort of an inflation in credit scores. And so when you start taking that away, that the downside could be much greater than we think.
And again, I want to point you to, let me give you some real numbers, which I thought was fascinating. In the case of Affirm, buy now, pay later, it's kind of the, this should be the focal point of credit issues, right? Kind of borrowing without FICO. In their measure of credit, every quarter until this quarter, the percent of borrowers on the highest kind of quality borrowers came down, i.e. they were getting worse. In this quarter, it actually leveled out. It actually not gotten worse. So I know there is, a lot of fear, but the evidence shows that, the business model isn't necessarily, getting into that adverse selection of, worsening, deteriorating credit quality. What would the future look like? I don't know, but so far, very stable and very strong.
As you can see over here, we have SoFi stock that is sitting at $7.23. We had a pretty decent support around $4 to $5 area right around over here. We bounced back. We hit a low of $4.82 once the earnings was leaked last week when SoFi announced their earnings. But we definitely bounced back, and we're sitting pretty bullish right now. When you look at also the overall market, it's just taking a massive dump today. Unfortunately, we are rallying for the last 4 days, and we hit some form of resistance over here at around 409. And also we got the retail sales data that came out yesterday. We have Jerome Powell stating that, okay, he's going to do whatever it takes. He's going to increase rates as high as possible to kill inflation, and those comments are just not really bullish for the overall stock market. As you can see, we gave back the majority of the gains that we made for the last 4 days. So it seemed like this was the bottom, but unfortunately, if we have a continuation move to the downside, we might see another low And another important price level to watch for the overall market is going to be around $380. This is the SPY S&P 500 ETF. But let's talk about SoFi, what to expect. So we know the overall market is definitely digesting this news that came out about the retail sales data and what Jerome Powell is stating. So it could be very rough for the next few days, for the next few months, but we can slowly start to recover with SoFi stocks. At one point we were talking about a few weeks ago, SoFi could potentially be trading at around $4 because of the recession fears, and they could potentially be valuing SoFi just by its book value and etc. But right now we're sitting at $7. So you never know how things can shift. But I believe that SoFi stock is a solid company to hold for the long term. But in the short term, we might potentially see volatility across the board for SoFi. So in the short term, just keep an eye. If we can continue to hold this price point level, the other price point level we're watching is around $8. So if SoFi can push through $8, that is going to be the next resistance price point level to watch. And if SoFi breaks down, just like what the overall stock market did, another key price point level to watch is going to be around $6.11. We have a gap over here that could potentially get filled too. So also keep in mind the price levels between $6 and $5.69. So that's going to be the short-term price prediction for SoFi, depending upon if it goes bullish or bearish. So those are the key price point levels to watch out for. But let me know in the comments section below, what do you think about SoFi? Could SoFi stock potentially outperform the rest of the market for the second half of the year? I'd love to hear your opinion. Of course, let me know also if you actually are making money right now, because we had a pretty decent bounce on SoFi. If you actually bought SoFi around $4 or $5, you're actually up pretty decent. So let me know in the comments section below too. I'd love to hear your opinion and your comments. Of course, if you're new to the channel too, make sure to subscribe to the channel, turn on the notification bell. But I'll catch you guys on another video. Have a wonderful day.